Hello, student, and welcome to our class today. Today, we are going to talk about the income tax. Income tax, we are going to focus on the amount of tax that is normally remitted by consumers or individuals to the tax authority of that particular country. Like in Kenya, anyone who earns an income is supposed to pay tax to the government from that particular income. So the earning of an individual, which is subjected or limited to the government as a tax, is known as the income tax. So the income tax, it is tax that is paid by individual employees from the income they earn. So you realize that the taxation is going to be based on what we call the taxable income. The taxable income. This is actually the base on which tax is normally calculated. So the taxable income here means that the more income you earn, the more tax that you are going to pay. And therefore, how do we get the taxable income? The tax that you are going to pay, we have said, is going to be subject to the taxable income. The more the income, the more the tax. To get the taxable income on which we are going to compute the tax, it is normally obtained by adding the basic salary plus the taxable allowances. If you add the basic salary and all the taxable allowances, the amount of money that you are going to get is what we normally call the taxable income. Then this amount that we have referred as the taxable income will be subjected to taxation using the prevailing tax rates. Using the prevailing tax rate. So, like for example, here there is this tax rate that is applicable. Actually, I picked this question from the question that I gave you to attempt, where you are told that the taxable income per month, you are given this table, the taxable income per month, whereby you are told the first 10,164. We have here the tax rate. It is 10%. Then we have the next 9576, 15%. We have the next 9576 being taxed at 20%. The next 9576, it is taxed as a 25%, and anything that is over 38,892, it is taxed at 30%. So in this particular question, you were asked to calculate the monthly salary that an employee was to get. This employee was earning a basic salary of 65. The basic salary for this employee was 65,050, and he was given a house allowance. He was given a house allowance of 12,000 per month, like that. So if this is the case, then we can get the taxable income. We can get the taxable income, which will be 65,050 plus 12k, which we are going to find that 65,050 plus 12,000, the taxable income of this person is 77,050. This is actually the amount of tax that we are going to to subject to taxation, the amount of income rather, the amount of income that we are going to subject into taxation. So if that is the case, how are we going to go about it? From the table we are told the first 10,164 out of these, the first 10,164 it is taxed as 10 at 10%. So what are we going to do in that case? We tax that. We can come here and we say the first 10,164 we taxed at 10%. You find that it's going to be 1,0164.4 there. That is actually what will be the tax. So the first 10,000, if we multiply by 10%, we get 1,016.4. Then we have got the next slab, we have 9576, which is taxed at 15%. So 9576, if we tax at 15%, you get that we are going to pay 1436. 1436.4. Then we go to the next 9576, we tax at 20%. 9576 times 20%, you get it is 1915.2. Then we can go to the next 9576, we tax at 25%. 9576 times 25%, you get it is 2394. Now you are told anything that is above 30,000, anything that is above 38,892, we tax at 30%. What is above this? What is above? Remember, the taxable income is 77,050. And how much have we taxed? We have taxed 10,164, 9576, 9576, 9576. Let us see how much we have taxed first so that we can be able to know the amount that has not been taxed. So we have got 10,164 plus 9576, 9576 times 3 times. We have done it 3 times. You find that we have actually taxed that 8,892. So how much has not been taxed from this? So if this was the amount that was supposed to be taxed and we have taxed this, then the difference is going to give us the amount that has not been taxed. So we have 77,050 minus answer. You get that we have not taxed, which is now going to be our last, is going to be 38,158. This is what we are going to tax at 30%. So we tax this one by 30%. You find that we are going to pay a tax of 11,447.4. So for us to be able to know what we normally call the gross tax, the gross tax will normally add all these figures, all this amount that we are supposed to pay as tax. So the first one was 1016.4 plus 14.6.4 plus 1915 plus 2394 plus 11,447.4. So the total amount of tax that we are supposed to pay, which we normally call the gross tax, is given by 18,209.4, like that. So having obtained the gross tax, we can now go ahead and we get what we call the net tax. The net tax is normally given by the gross tax minus relief. Relief is actually like you are being reduced. They reduce the tax that you're supposed to pay out of. It's like actually simple there. Instead of paying now 18,209.4, then they give you the relief. In this case, the relief was 1162. So if we subtract 1162 from here, you find that the person will pay a net tax. What actually will be paid is going to be 17,047.4. This is actually going to be the net tax. So in this case, the question was talking about the net tax will actually be the difference between the taxable income and now the tax that we have deducted to get this.